even if I participated in a group investment where I did not own 100% of that real estate, the benefits still far outweighed, going back and going to buy another, single family rental. Right. And then on top of that, I was like, and also I get to keep my time, which time is super precious to me, especially right now. Right. I mean, with my 5 children, they're all entering, they're in their teenage years. I have very little time left with them before they all go off and do their own thing. And so I'm thinking to myself, I've got to be more intentional about this. I've got to be in a place where I can take them to Paraguay for 3 weeks and go build a school together and not be tied down to like a W-2 job, or not be, not have to stress too much about our finances and things like that. And so it was really intentional to, move into this space so I could have more time, but still have the benefit of investing.
All right, guys, here we go now. It is time to unlock more doors to deals. We're real estate investors here. We're real estate agents here, and we all have one thing in common. We believe that we can. We can live the life of our purpose. We can create financial freedom. We can build a better life for those that we love, and we can live the life of our dreams. I don't care if you're trying to do your first deal or your 500th this year. You can get to the next level, and we're here to help. Hey, welcome to Doors to Deals. I'm your co-host and founder, Jim Manning. Today's episode can be found on doorstodeals.com/080. Today, Ryan Wessels, my business partner, and I had the chance to interview Camilla Jeffs, and she is an accomplished real estate investor that specializes in apartment complexes and doing syndication deals. So we're going to dive into some of the ways that she analyzes deals, assesses deals, and some of her deal structures at these higher price point commercial properties. How she crafts them, how she puts them together, and what she looks for. So before we get going into that, just a quick reminder, we help people become financially free investing in real estate. Our main goal as Three Doors as our real estate company here in St. Louis. Our main goal is to help 250 people become financially free investing in real estate through helping you generate passive income. And last year, I'm really proud of this. We actually helped generate $130,000 a month in passive income. So we have a lot of great opportunities for you. If you want to tap into any of the resources, opening up the conversation simple. Just send us an email to deals@threedoors.com, deals@threedoors.com, and let us know that you're looking for some passive income investment opportunities. So then the last thing is let's get going with our iTunes review of the week.
This week's review comes to us from Titans Win 13, titled Great Content, 5 stars. Titans writes, Three Doors delivers great content and tips as well as value if you are brand new or a seasoned veteran in real estate investing. Titans, thank you for your review. Jim, back to you.
All right, guys. Well, thanks a lot for that review, and throw us some love. If you're getting value out of this content, please don't forget to write us a review on your podcast player of choice. Helps us get the word out and helps us reach more people. So I really appreciate you doing that in advance. So let's get started with this interview. Hey, what's going on, guys? Jim and Ryan here with another Doors to Deals episode. And today we have Steady Stream Investments, Camilla Jeffs on the line. Welcome, my friend. Glad to have you on.
Thanks, guys. I'm excited to be here.
Awesome. So give us a little bit of background on who is Camilla and what is Steady Stream.
All right. So Camilla is a long-term real estate investor. So I've been investing in real estate since I was 22. I got my first property as a house hack and did that. Now, it was awesome. It worked out really well. And then went on to do a bunch of single family properties and then continued to scale, did small multi. And then, after about 15 years of that, kind of hit a breaking point where I was really struggling with all the work that it took to be a landlord, to be the acquisitions person, the asset manager, the landlord, the lawnmower, the everything. And so I was just trying to figure out, well, what do I do? And also had done all that with all of our own money, all of our own time, all of our own skills. So never had like explored the value of partnerships. Just wasn't sure if that was right for me. And then at that, at that tipping point, I was just thinking, man, there's got to be a better way. I'm just so burnt out. And by that time, I had 5 children. And I'm like, man, this is just, life is a lot. How can I simplify? What can I do to figure this out? But I knew real estate was the right way to invest. I like full on believe that real estate is the absolute best investment vehicle out there. And so I was looking for something different. And then I thought, well, I've always had buy an apartment complex on my vision board. Maybe I should go after that. And then I looked up how much apartment complexes cost and looked at my bank account. I'm like, yeah, I don't have millions of dollars. Like, how am I going to buy an apartment complex? And so then I started trying to figure it out and learn about it. And I realized, oh, you actually don't buy them on your own. Usually you partner up with people and you like together a group of people. Some people put in their time, some do their money, some do their expertise and skills. And you buy it and then everybody shares the returns, like group investing. I thought, wow, that's pretty cool. And so I tried it out. So I put some money into one as a passive investor and I loved it. I was like, wow, this is amazing. This is really amazing. So Steady Stream Investments was launched to teach other people how to be passive investors, to teach other people this other path that you don't have to, spend all the time and effort and all of your own money and things in investing in real estate. Like you can just join one of these group investments and take advantage of all the benefits that we love about real estate, like cash flow, taxes, and appreciation. And you get to do it without having to be a landlord. It's amazing.
So how many years have you been doing the Steady Stream and kind of get into apartment complexes now?
So then been doing Steady Stream for 3 years now.
3 years now. Okay. So that puts you at really 18 years investing. Congratulations on that. That's awesome. So yeah, I love meeting people that have more kids than I do. It's not often I have 4 kids.
You have 4? Nice.
Yeah. So man, a mom of 5 kids and doing all these deals, like how do you juggle everything?
People ask me that all the time. And I just say, just one day at a time, right? Like it's just, I just take one day at a time and I figure out the priorities for the day and then go for it. And I'm also very, very intentional about my time with my children and when I spend time working and when I don't spend time working. And I'm not the entrepreneur that's working sun up to sundown 24/7 and on the phone at dinner. It's not my style. And so I believe that you can have massive success, but you can still do it in a very intentional way that doesn't require you to go into crazy mode.
How many hours a week do you work?
Oh, normal 30, 40, maybe. Yeah.
So you mentioned, you've had 18 years in the business. You did a lot of it through your own. I love the fact, by the way, you had the 3 T's. We call it the 3 T's: time, talent, treasure, but you said it slightly differently, but it's more or less the same. We kind of discussed before we started this that you have those 2 trophies behind you. So you've been in the business for 18 years. You've had a lot of success and you haven't done it on your own. So who's been influential in your world of real estate?
Yeah, well, so that first 15 years was all on my own, but then when I started realizing about partnerships and if I really wanted to level up my game and I wanted to get into the big stuff, I had to go through a mindset shift for that. And so a lot of that is opening your mind to hiring mentors to help you. And I did, and I had to do that. And I benefited from it. So like the trophies right there from my mentors, for achieving some big goals that they had helped me set. And that was awesome. And so, working with mentors has been very instrumental. I don't think I could have gotten anywhere close to where I am today if I did not actively seek out mentors. And there's all sorts of mentors that you can find, especially in the multifamily industry. Like you can go for a mentor who's kind of a all-in-one, where they'll teach you acquisitions, asset management, capital raising, underwriting, like all the things. Or you can take a look at yourself. And this is what I did. And I took a look at myself and I said, okay, now that I understand the basics about multifamily investing, which of those four suits me best, right? In terms of my past experience, my current skill set, and my future passions. And so for me, it came down to raising capital. And that's where I really landed and decided that would be the most fun for me, because I have an education background. I love teaching people. I love I love the online marketing of it. I love helping investors, really just getting them from point A to point B. And I decided I'm going to specialize in teaching the first time passive investor how to get into a deal, because there's like a really big learning curve that you have to go through in order to understand commercial investing as opposed to residential. Residential is fairly simple and straightforward, but when you're getting into all these other things like IRRs, equity multiples, those were metrics I had never thought of before in my first 15 years of investing. And now you have to think about that, and you have to understand and figure out what it is. And so that's where my passions lie. And so then I hired a mentor who was specific to raising capital. And that's made a huge difference because I niched down.
So let's talk about that last 3 years then. So first and foremost, congrats for doing the mindset shift. And without that, like you've said, self-proclaimed, you wouldn't have had the success you've had recently. So just brag on yourself a little bit. In the last 3 years, what have you accomplished?
So last 3 years, I've been able to raise over $5 million for several deals. I'm about 850 units that I'm a general partner in. And also I am a general partner on an assisted living new construction deal that we'll be building starting this year. So super excited about that. But more than that, I'm really excited about all the investors who trusted me, who came in and really took the time to learn all the things and to go through kind of my, passive investor onboarding program to really understand all the things that they would need to understand, and took the leap of faith. And because for me, it was a little bit of a leap of faith too. The first time I invested passively, because it's a big chunk of money. It's not a small chunk of money, that you're investing into a project. And it was a little bit nerve-wracking, but like living that experience, I think has helped me to really understand the first-time passive investor and help them also live the experience and make it through. Because I really believe once you try it, you're going to love it.
Sorry to interrupt you. Are you selling shares, units? Is it in shares? Sorry.
Yes. Well, so we have the LLC, right? And so they invest in the LLC. Yes.
You're investing in the LLC. So one last follow-up question, and then Jim's probably got something. So one of our big 10-year target, we say it at every one of our internal meetings, is we're trying to help 250 people become financially free. So again, you've helped, we share in that, it sounds like you've helped raise 5,850,000 units. So again, how many people have you impacted in their lives by doing this?
Over 100 so far.
Awesome. That's awesome. That is awesome. We have I don't know if that's your big, hairy, audacious goal, but that is ours. 250 people become financially free. So
yeah, for sure. For sure. I'm right there with you. Like I do have really big goals to help people. And I think this is the first step. One of the first steps to really growing and building your wealth while maintaining your time.
Absolutely.
So what type of internal rate of returns are you seeing? Like as far as the buildings that you've purchased, and like what are you trying to get when you buy these properties?
So our goal is to get anywhere between 16 to 17% or IRR is kind of what we're looking for. And those are for, C class, B class type properties.
That's great.
That's really good.
And then are you factoring in like any sort of appreciation on that, or how do you factor that in on your internal rate of return?
Yeah, so that's factored in. Most of it is forced appreciation. So, and forced appreciation, for those who are listening, if you don't understand that, that means that we can go in and we can take the value of a building and we can increase its value either by increasing the income in some shape or form. Doesn't always have to be rent increases, or decreasing the expenses, and thereby increase the value of the building, which is one thing I love about investing in commercial, right now, and multifamily, because I can control the value of the building. Whereas when I did all that single family stuff, it didn't matter what I did. It seemed like, it was only whatever Susie sold her house for down the street, that's the value of my house. And there wasn't much you could do about that. So another reason I love investing in large multifamily is for that. So we'll do a forced appreciation, and then it depends on the market where we are, but we don't bank on a lot of natural appreciation. There'll be some right over the years, but for me, natural appreciation is kind of a gamble. You just never know, right? None of us know if the markets are going to grow quickly or slowly, or or grow quick for a year and then all of a sudden crash. Like, we just don't know, and so we really focus on that forced appreciation.
Oh, I love that. Absolutely. So, how many walk me through just like your typical deal structure that you've seen? Like, how many partners get brought in? Is it like $1 million deal, or let's go into some nuts and bolts on some of these deals.
Sure. I'll talk about a property we picked up in Oklahoma. It was 100 units, and the purchase price for that was $6.5 million. So we ended up raising about $2.5 million for that project. So in terms of the people who's involved, there were 5 general partners in that property. And then as far as limited partners or passive investors, I don't know the full number, but it was somewhere around 50 to 60 passive investors. So really, it's kind of cool because in this group, right, there's like 50 to 60 people whose lives are changing right there in just owning this one project. And so what we did and the way we structured it is we structured it as a 70-30 split. So 70% of the profit goes to passive investors, and then 30% goes to the general partners. We also did a 7% preferred return, and a preferred return simply means that as a passive investor, you're going to get paid first, up to 70%, before general partners get anything. And so we like to do that to help the passive investors get more incentive and get more cash flow. Sometimes it's a bummer for us general partners because that means that sometimes it could mean no cash flow for us for the first couple of years until the cash flow really starts humming. But that's okay because we really want our passive investors to be happy and to have a really great experience when they invest with us. So we do those splits, and then our projections were that we're about a 1.8 equity multiple, and equity multiple means how much will your money turn into over the course of the investment. So over about 5 years, which is a typical hold for us. Then your money will, if you invested 100,000 and it's a 1.8 equity multiple, that means in 5 years that 100,000 will have turned into 180,000 via a combination of cash flow along the way and the equity that you receive at the time of sale.
So really, like the game plan is to sell all of these at the 5-year mark. It's not necessarily hold on to any long term.
Yeah, when we do our financial analysis, we always look at holding longer because I'm a cash flow investor. I love cash flow. And so I always look at holding longer. But when you're using investors and investors are investing in it, once you get past the 5 years, really kind of the law of diminishing returns starts to kick in, and the returns just aren't as great for investors if we were to sell at around that year 5. Now, we always say around year 5 because if year 5 comes and it's a bad market, we're not going to sell. We're going to hold on to that property until the market comes back up, till it's an optimal time to sell, to make sure that everybody gets a good return on their investment.
So, okay, we've just went through a scenario. What's going on maybe in some people's minds, because we don't do a lot on the commercial side. Jim and I, we have a few commercial buildings ourselves, and maybe some of the listeners that we have aren't necessarily listening and have a ton of experience in commercial. So Go back 3 years if you could. What was the biggest obstacle to overcome or the biggest learning curve for you coming from retail and going to commercial?
Well, a couple of obstacles. So one was that mindset shift to partnering, right? Because in retail, I did everything myself, but I also owned 100% of my investments, right? Yep. So it feels weird to put your money into a project that you don't own 100% or you don't get 100% of the proceeds, right? Mm-hmm. But when you look at the amount of money that you're going to make, right? I think that the one thing that helped me out the most when I was looking at the projects and trying to figure it out was that equity multiple that I just explained. I was like, okay, I can really latch on to that. That feels like it's an easy thing for me to understand that, okay, if I invest my 100,000 in 5 years, it will be 180 to 200,000, right? So it could double my money in 5 years. And then I looked back at some of my retail projects. I'm like, did my money double in 5 years? Not really, not really, right? Not too many of them did it double in 5 years. And so that was fascinating to me that even if I participated in a group investment where I did not own 100% of that real estate, the benefits still far outweighed, going back and going to buy another, single family rental, right? And then on top of that, I was like, and also I get to keep my time, which time is super precious to me, especially right now, right? I mean, with my 5 children, they're all entering, they're in their teenage years. I have very little time left with them before they all go off and do their own thing. And so I'm thinking to myself, I've got to be more intentional about this. I've got to be in a place where I can take them to Paraguay for 3 weeks and go build a school together and not be tied down to like a W-2 job or not be, not have to stress too much about our finances and things like that. And so it was really intentional to, move into this space so I could have more time, but still have the benefit of investing. So that was those were some of the obstacles that I had when I was looking at, should I invest into a group investment or just do things on my own? I think you have to take stock of where you are in your situation. Do you still have time that you want to put into it? If you do, okay, go do a retail project, right? But if you're getting scarce on time, join a group investment and you're still going to be earning some pretty incredible returns.
So one thing that just popped in my head, you said the returns as a partner, right, could be year 2, 3, depending on the returns. So you said that you decided to go down this route. So I'm assuming you haven't been working for free. So explain the financial aspect. So you
got in, being a general partner,
right? Yeah. So you got in. Okay. You were a passive investor to begin with. Now you've gone to the general partner. So the hole that I'm seeing, and I'd love for you to fill it, is how'd you make your money during these 3 years?
Hey guys, for those of you that are local to St. Louis, I wanted to make sure you knew about an amazing resource that we have to help do some extra deals. You can email our team at deals@3doors.com. And just so you know, we do deals with other investors all the time. Like, it's been hundreds and hundreds over the years, and we've averaged over 100 deals with other investors per year for over the last 5 years. We can straight up buy the deal if you have a wholesale under contract that you want to sell. If you need funding to finance a flip, or like you're doing a burst strategy, we have funding available for you. If you're trying to wholesale a deal, we're doing JV wholesale deals with other wholesalers that, quite frankly, some of the deals we're putting together for a beginner or an intermediate investor, they'd probably be walking away from because we have systems and processes and we have buyers in place that are paying top dollar for these properties. So make sure you use this resource. And the best way to get and the easiest way is to just send us an email, deals@3doors.com. All right, back to the episode.
So you got in, okay. You were a passive investor to begin with. Now you've gone to the general partner. So the hole that I'm seeing, and I'd love for you to fill it, is how'd you make your money during these 3 years?
Yeah. Well, so keep in mind, I still have passive investments, right? But I think the bigger question is, how do you make money as a general partner? What if you become a general partner? So as a general partner, we get paid three ways. So one is via the acquisition fee, right? So there is an acquisition fee that is charged to passive investors to put together the project. So it's to pay for all the time to go out and find the deal, to make the relationship so we get a good deal, to do the underwriting and do a full financial analysis on it to make sure the property is going to be okay. Deep dive on due diligence. I'm sure you guys have heard due diligence before, but it is magnified by 100 when you are doing commercial investing, as opposed to retail investing. I just hired a home inspector and that was my due diligence, right? Commercial, it's magnified. You're diving into all the financials because it's basically like you're buying a business. It's not just a piece of property. You're buying a full-fledged business. Mm-hmm. So you have to do super deep dives. And then also for signing on the loan, because passive investors, you don't have to sign on the loan, right? You don't have to be personally liable for that property, which is amazing. And then also for just, putting the deal together, getting all the legal documents drawn up, everything. That's what the acquisition fee is for. So it's an acquisition fee. So that's one of the ways that a general partner gets paid. Another way we get paid is through the second fee, which is called an asset management fee. Now, sometimes all the general partners participate in that. Sometimes it's just the partners who are really doing the work of managing the asset, but there is that fee and that's paid either a monthly or quarterly basis. And then the third way that general partners get paid is via the equity split. So the profit splits. And like I said, the profit splits are the ones where you probably won't make very much in terms of cash flow the first 1 or 2 years. Then it will start to go. And then, at the end, you'll get more, you get a bigger payday at the end. So, I mean, if you're a real estate agent, it's very similar to commission-based living, right? So you get a commission for putting the project together, you get a commission when it sells, and then you'll get a little bit of money in the between.
Yeah. Got it. Love it. I think I had stolen your last question. I felt like you were about ready to ask her something.
You're like whispering. I don't know if people
during the last segment.
Hear you. No, I'm curious about it. So then the general partner, sometimes you're a passive investor putting money in, and sometimes you're not. You're just putting your time in and your talent into it. Is that correct?
So are you asking if the general partner invests in the deal themselves?
Yes. Yeah.
Okay. Yeah. So typically in every partnership I've done, the general partnership will invest money into the deal. And they go in as same as a passive investor, right? So that happens as well.
Yeah. And that's why I said you're also a passive investor as far as buying in a stake or a percentage into the deal. Okay. Mm-hmm. So if I can kind of circle back, one thing that kind of is a little bit of a pet peeve of mine is, and I don't know a better way to say it. I think Grant Cardone's not the only person that teaches this, but his is the most stark 10x. You got to bleed and grind it out to be successful. Right. And certainly you have to work your tail off, but this whole work from sun up to sundown thing, I just don't think it's necessary. Actually, the most successful people I know in real estate that are entrepreneurs have a pretty darn balanced lifestyle. So were you always this balanced? So like the first 15 years when you're doing, heck, when you were even cutting the grass, were you a sun up, sun down person, or walk me through that and that evolution that you've taken?
So was I always this balanced? No. I think we all go through this, and you buy into the hustle mentality. It just kind of it comes and you're just like, man, and there's just so much noise around 10xing. Honestly, it makes me want to throw up a little bit in my mouth, but it's like 10xing or hustle and grind and you got to do what it takes. I mean, just yesterday I was doing some research because I'm trying to put together a course for other entrepreneurs on transitioning from W-2 to being an entrepreneur, because that could be a really intense transition, because you're used to work being handed to you, and now all of a sudden you have to figure out your own work and do all that, and it could easily consume you. And so I was like looking up on websites about advice for entrepreneurs, and one website, the number 2 point was, you're gonna have to work way more. And I was like, wait a minute, that's not the whole reason that you would want to become an entrepreneur. I think was so you have freedom of time, so you can clear your calendar and do the things that you want to do rather than the things you have to do. And so it was really interesting, the whole mindset. And I was having a discussion with a couple of friends too the other day, and we were all just frustrated by this, because it's almost like people put you up on a pedestal, or you're bragging about my morning routine. I get up at 5 a.m. and I do this and that and that, and like, and now I'm juiced for the day. And like, okay, great. If that works for you, that's great, but it doesn't work for the majority of the population. And it's just not necessary. It's not necessary. Yeah. It's totally fine to, for me, I get up and I get my kids off to school, and then I'll do some yoga, and then I'll come in and I'll work, and kids get home at 4, I shut down, and I don't work the weekends, and it's just not, necessary. It's and really you can be super intentional about your time and prioritize the right things.
I couldn't agree with you more. I think what I've found is that there's a saying that the amount of time a task takes expands to the amount of time you give it, right? And if you say, well, I'm going to work sun up to sundown, well, that thing that might have taken you 20, 30 minutes may take you all day to do, right? Right. And the other interesting thing is I'm rereading for the third time a book called High Performance Habits by Brendon Burchard. And what he did was he studied the top 1 percentile high performers across multiple industries, these ultra successful people. And what he found was that the ultra successful people, not only do you have a clarity on what your goals are and where you're heading, will actually self-monitor and many times look at goals 2-3 times a day, and just constantly making sure that you're working, that they're working smart, and actually not like stuck in the mud. Like, if you're driving a car that's stuck in a mud, you're busy, but not really getting anywhere. So if you really, you take the time to set the goals, get crystal clear on the vision and what the purposes of your business is, and how that's going to impact your life, then you may only have to spend a couple hours. But if you move that forward to your end goal, you're going to be much further ahead than somebody else that works 12, 15 hours in a day. That's just like a chicken with their head cut off, not getting anywhere. So I absolutely agree with you. And it's not easy getting clear. It's not easy knowing what the best steps are to do. And really, that's why mentors are so important too. They can help you with that.
Act like you're going on vacation every day, the next day.
Yeah. I think the other thing that's not easy though is even when you have clarity, right? It's not easy to push away the distractions, all those squirrel moments, all those shiny new pennies. And you're thinking, oh yeah, I want to try that. Oh, I could totally do that with my business. I could totally go this direction. But if you are very clear on where you're headed, then you've got to just push away those distractions.
Yeah. The not do list actually is more important than the to do list. Being able to stay focused. That's absolutely true. So, okay. So, well, what's next for you? You got all these amazing things happening in the rearview mirror. Like, walk me through, if we're talking 5 years from now, what have you accomplished? What's your business look like? What's your life look like? Yeah.
So I set out on this journey, and as I looked at, at what it would take to be successful in the business and where I wanted to go, I kind of put together a 5-year vision, right? So I'm already, a couple years into this 5-year vision. But at the end of the 5 years, I would love to be in a place where, maybe I could just step back and just be a passive investor completely. Right. And not be a general partner, not have to work actively in the business. That would be a place that would be nice to be. But I know my personality. I don't think I could just step back and just do that, because I have so much fun helping other people and, teaching about it and just really, trying to, get more people into this business and into this game, because it's a changer. It will definitely change your life. So I know myself. I know I'll probably just continue working in this in the business and just trying to, really, I'm trying to like double the amount of people I help every year is the goal.
Oh, that's amazing.
That's great.
And that's one of the best things about real estate is like, I one time sold a long-term rental to an 82-year-old individual. It's like, it's like retiring. Like, what is that? Like what we do every day and what we get to do is so much fun,
Yes, it is for sure.
It's like us, and there's lots of headaches and things like that too. But it's really a blessing to do what we do, isn't it?
Yeah, I agree.
All right. So you're going to double the amount of people that you help. Then what about like from a portfolio standpoint? Like, do you have any investment goals that you're going to try and hit?
Yeah. So my portfolio, what I want to do is I'd like to do 4 to 5 quality deals per year. So I think in the first part of my journey, I was just trying to do as many deals as I could to like get, deals under my belt. Now I'm going to be a lot more intentional about the deals that I do and the deals that I don't do. So I want to establish really strong relationships with partners, and then deepen those and do multiple deals with specific partners, and then also bigger deals, right? So I want to do ones that are more in the $20 to $50 million avenue rather than the 6 to the 5 to 15.
So for context, the first 3 years you completed or were part of how many deals?
7.
7. Okay. So then you do actually want to do more deals per year and be more intentional at the same time.
Correct. Yeah.
Awesome. Certainly doable.
Mm-hmm.
Oh yeah. That's amazing.
1 a quarter. That should be easy, right?
Yeah. Yeah.
Hey, why not? So and then like another question I like to ask is like looking back at your journey, like what would be like if you're just starting out again? I don't want to date you to like 20 years ago.
Yes.
20 years ago, what would be the most important, like actionable piece of advice you could give yourself, your 20 years ago self, that would be like the most important thing to set yourself up for success? What do you think?
I think I would tell her to network more, like grow a network. Don't wait, because I didn't do that. I was, I'm a fairly introverted person. I didn't enjoy going to conferences or, big, large groups. I like one-on-one conversations, but, and so I didn't spend any time at all growing a network of people. And now that I'm in the position where I am now, it's crucial to my business is to have a large network. And so I think that's what I would tell myself, in the beginning, is just say, just start going to events, start, talking to people, getting to know people, because you never know what door that will open in the future. And because I stayed so closed for so long, I probably missed out on some opportunities. Not that I regret anything that I did, because I think life is a journey, and everybody's journey happens in a certain way for a reason. But for someone else starting now, I would tell them, start.
Why did so you said you stayed closed for so long and you kind of missed out. So why do you think you were so closed? Like looking back now, knowing what you know now.
Well, because I was an introvert and I wasn't really good at, like creative financing, that scared me. I was scared of anything creative. I like, no, I'm just going to use my money and just use my own time and use my own credit score, to get the properties and from a regular mortgage, and so just not realizing that, there's bigger things out there. And just like one way of thinking, I was just kind of stuck in one way of thinking in terms of real estate investing, that it just had to be just us getting our own properties and doing all the work ourselves, and then, selling it and taking care of it.
So for someone else who's out there listening and also introverted, doesn't really like to go and meet people in big groups.
I have tips,
but they do like one-on-one. So how'd you break through? Yeah. What are the tips?
Yeah. So as this is what I do when I go to, you have to sign up for a meetup and force yourself to go, right? Like, I know it's uncomfortable, but you have to go.
So Wait, stop right there real quick. Did you force yourself to go, or did you have someone holding you accountable in order for you to go?
Mostly I forced myself to go, but an accountability partner is a great idea too, right? So if you know another person who's an investor,
and it did take her 15 years to go to her first meetup. So.
No, see, it took me a while.
Sorry, I interrupted. So meetup.
Yeah. So go to a meetup. Now you can search for meetups online, like go meetup.com, whatever, and search for multifamily. Is exactly what I did when I was living in Arizona at the time. And I just searched for multifamily investing meetup, and one popped up, and then you can see how many people register. And there was like 15 people. I'm like, okay, perfect. I could go to this. This feels safe. I'll go to this one. So I went to that, and only 10 people showed up. So even better. So it wasn't as many people. But I was still very uncomfortable, but I knew that I had to talk to, and this is what I did. I set a goal for myself. I said, okay, Camilla, you have to go and you have to talk to 3 people. 3, you can do 3. And then if you're still uncomfortable after those 3, you have permission to leave, right? You don't have to stay the whole time. You just talk to 3 people and leave, right? And so that's how I started attending meetups. As I started with these small ones, and then I got brave. I got real brave. And I'm like, okay, I'm going to go to an actual conference, like a real estate conference, where there was going to be 800 people. And I will tell you, I full transparency, I got there, and there's so many people, and they're just standing around talking very loudly. And I walked into that conference, and I turned around and walked right back out. Like, I don't know if I can do this. So I sat in the lobby for a minute, and I'm trying to hype myself up. I'm like, okay, Camilla, you've got to go back in, and I'm an education junkie. So I was really there for the education. Not necessarily the networking. I'm like, okay, this is what you're going to do. You're going to go back in, you're going to look around, and you're going to find somebody who's sitting all by themselves. And then you're going to go sit by that person and have a conversation with that person, because chances are that person is just as uncomfortable as you are and is probably an introvert, and would actually be very relieved to have one person come sit by them and talk to them in a normal way. And that's exactly what I did. And funny story is that person has ended up being one of my partners in a deal, right? That at that very first real estate conference I went to. So those are my tips for introverts. Look for the other introverts, and you'll know them because they'll be alone. and then also make a goal, talk to 3 people, and then give yourself permission to leave. And it's totally fine. And you can grow your network slowly. Like, there's no reason for you to put yourself so far out of your comfort zone that you'll never go again, because it's not, you got to take little bites at things.
Yeah. There's a book called Atomic Habits that talks about the little bites like so well. And like he says, like, you break it down, like if working out's one of your goals, well, day one, just put your workout shoes on and like get your workout clothes in a bag or something, and then day 2 is go to the gym. You don't even have to go in, just go to the gym and like touch the door. And that what happens too often is we make these big goals, or like we want these life-changing habits, and we logically know we should do it. but then we try and do it all like as if we've been doing it for a couple of years and already have those skills developed and everything like that. So yeah, so guys, like in that skill set, breaking it down into bite-sized pieces, like I don't care what you're trying to get good at. If it's investing, and right now I'm trying to work on my golf swing. Like, so I'm just bite-sizing it down, right, into small little chunks, and just trying to, if I swing a golf club one time, I get one swing in on a day. Okay, great. I didn't break the chain. I'm going to try
this year.
I'll try and beat Ryan every time this year, not just just a couple of times. But yeah, no, it's absolutely so true. So, well, I mean, how do people find you? Do you have like a website or how do people find you?
Yeah. Easiest is CamillaJeffs.com. I have that website, and you can connect with me there in multiple ways. I have some free guides there. And that can also take you to SteadyStreamInvestments.com, where there is a free guide that's called Passive Investing Made Easy. And it's a series of videos that walks you through the process from A to Z. Like I said, I like to educate the first-time passive investor. And so if it's something you've been interested in, go grab those videos, and it will really help you at least understand it.
All right. Well, fantastic. Well, thanks so much for your time. I appreciate you coming on. And
yeah,
I mean, I'm out of questions.
Thank you so much.
All right. Well,
thanks guys. Appreciate it.
Okay, guys, that's a wrap for today's episode. Once again, for the full show notes, just check out our website, doorstodeals.com/080. And then also, we're trying to help 250 people become financially free. We've been pretty successful at it so far, helping generate about $130,000 a month in passive income. If you have in your heart of hearts the desire to build whether that's a rental portfolio or just passive income, when it comes to investing in real estate, we're helping a lot of people out, and we can help you too. Just send us over an email to deals@3doors.com, deals@3doors.com, and we can get the ball rolling on that front. So that's it for today. Go out, live your purpose, and above all else, go after your dreams. Till next time. Thanks for tuning into this show. For more episodes and resources that will unlock doors to deals, check out our website, doorstodeals.com.